All right, hey there. Good afternoon, everybody. Sorry, as usual, allergies got me. Got this little coughing fit thing going on before I get on here. But I'm Christopher Hanks. This is Texas with Texas West Capital, and it's a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 16th of November, 2021. Here in a overcast, little bit rainy, Bernie, Texas. Glad to have you all checking in. Hopefully, y'all are doing well, trading safe. Remembering that risk management is the most important thing you're ever going to do every day. Day in and day out is what you should be doing it, guys, as traders, because it's the only thing that's going to save you from yourself. And trust me, you're going to need saving. So, who's here already? Let's see. We got Crypto Mowgli's here. Claudio, what's up, man? Keeps here. Let's see, who's that? I'm not sure I can read it. GOM8s? Is that what it is? Good to see you checking in. Maddie, what's up, man? Let's see here. Who else is here? Michael Williams, Mark Chenard. What's going on, man? And GOM8's there, or GOM8's. I'm just probably totally missing that, but checking in from London. So that's awesome. We got quite a few people that check in from the UK over there in that area. Oscar, what's up, man? Not Z, checking in from Pakistan. Man, I love it that you guys are from everywhere. That's so awesome. Hey there, Blaze, LXT, good to see you guys. Data's here as well. Jared the Great, got one of my favorite usernames there. I don't know why I like it so much, but I do. Let me see here. LXT, you're still working? You can't really follow the live stream? Maybe I can look at some major indices today? Why I gotta look at them today, man? I look at them every day for you. You get them twice a day, man. Yeah, I'll see what I can do about that. Let me see here. You knew I'd struggle? Yeah, I do, man. Let's see here. Isaac, what's up, man? Tal Walker checking in. What's up, buddy? Been a while since I've seen you checking in. Let me see here. And is that Ali there? Hey, good evening from Norway. Oh, man, that's awesome, man. I'll tell you what. Sometimes, I don't know, man. I've got so many options. Sometimes I think about that whole, that whole nice area up there, the Nordic area. And then sometimes I think about the beaches. I don't know, man. All I know is I'm not real happy with the the tax situation here in the U.S. So I don't know. There's always possibilities everywhere, right? You guys all have great things going on in your areas. Hey there, Diego. Good to see you. Ventures here. Wow, you're gonna I'm totally gonna mess this up. Man, I need my glasses. I can't even read that. Give me just 1 minute here. I'm going to say hello to you. But I got to see what your name is there. Tadeus? Is that it? Man, I hope I didn't screw that up too bad. Good to have y'all checking in. So as always, guys, hey, listen, you can join us here at howtotradetowin.com. Don't forget, right now, we do have a special going on. Excuse me. In conjunction with the current giveaway here. Don't forget, if you haven't checked, guys, join this giveaway. I'll go ahead and put this link in here. And I'm giving away, this Friday, I'm going to give away $1,000 in Bitcoin. I'm going to give away a PS5 with Spider-Man and Ratchet and Clank and an extra controller there, with the caveats here, depending if you're from the U.S. or not. Also giving away one annual TWC Tier 3 membership and one biannual membership there. And, of course, it gives you you can win an extra $250 in Bitcoin as well by liking and retweeting this tweet right here. And then, of course, following me on Twitter. You have to do those three things. You have to follow me, you have to like, you have to retweet this tweet right here. And you'll be entered into a separate drawing for $250 in Bitcoin as well. So you could potentially win $1,250 in Bitcoin. But right now, we do have... we're doing a discounted, we usually have a discounted quarterly price here for our, like I said, quarterly Tier 3 membership. It's discounted off that monthly. Monthly, it's $199. 3 months, you get a discount. But now you're getting 25% off that. And so you just use this code right here, 25% off QT3. It works on the quarterly Tier 3 membership. Use it while you can, guys. I have no desire to keep you in here with us longer than you want to be. Thankfully, most of the people come in and they stick with us for years, which I think is what makes our community so great. Very helpful, very kind, very great group of people, man. I'll tell you what, seriously, once you get in, you'll see. You know what I'm talking about. But, right here, you can just set your auto renew to off, boom, and then you don't have to worry about auto renewing when it's up, and you won't have me barking down your neck to get you to stay in or whatever. If you find it's worth your time, you'll stick around. If not, you'll move on, and that's okay. Just make sure that while you're in there, guys, you put in as much, especially Tier 3, as much time as you can, because we have so much content. It is crazy. Everybody comes in and they get all freaked out by how much we have. They're like, oh my gosh, I never expected it to be that much. Well, I told you. Yeah, but man, I didn't expect. So anyway, a lot going on there. By the way, this contest will end, I believe, at 10 a.m. on Friday. So good times with that, right? So make sure you guys jump in there and do that. Let me see here. Oh, what else we got going? Do I have anything else going on? Oh, I know. Here, this right here. Elliott Wave International, let me know about something else they've got going on here, guys. There's the link right there in the thing there. But it's going to be, let's see here. It's a video about the MSCI Emerging Markets Index following a clear Elliott Wave pattern. And so you can get access to that, something that they, the paid members get. And it doesn't cost you any money or anything, guys. You just sign up with a free account, or if you have a free account, log in and check it out. And you can, man, I'll tell you what. Anytime Elliott Wave International is giving you something for free, you guys should be jumping on that. You know, you guys are here always saying, where's my free alpha? Where's my free alpha? It's right there, man. Along with the things that I do. So don't ever miss a chance there to jump in with anything that Elliott Wave is doing, all right? By the way, guys, hey, don't forget, I'll just go ahead and pull this up here. I'll let you guys see what I've got going on my link here, on my profile here on Twitter. Tomorrow, let me see, is it tomorrow? Monday, Tuesday, Wednesday. Yeah, so tomorrow I'm going to be on here, Forex Analytics. You guys know I do that quarterly. And we discuss, charts and markets and things like that. So if that's of interest to you, y'all should check it out. It should be a lot of fun. Dale's a great guy. Dale's been around longer than I have as far as the markets go. And he's the host of that program. So a lot of great insight from him and his guys as well. So be sure and check us out there. Don't forget, you can always, of course, join my newsletter here and check that out. And yeah. Oh, by the way, yeah, man, check this out, guys. Hey, listen, if you're in crypto, then, you should know that stablecoins have become this real huge thing, right? And for good reasons and bad. The problem with the stablecoins in general, for most of them, is that they're backed by some sort of paper, some sort of commercial paper. And so depending on how good the quality of that paper is, so depending on what kind of company that corporate paper is coming from, could have a significant impact on that stablecoin if the markets were turning. If the economy is to roll over, like I've been discussing, I'm thinking it's going to. The ability to for that stablecoin to get its money back from that paper becomes increasingly worse, right? So if the economy goes into a downturn, then even really good companies are going to have a bit of trouble, right? If you're not so great a company, you're going to have a lot more trouble. And so what does that mean? It means that on paper the reserves are there, right? But if they have to actually cash it in, if they have to actually get back those dollars, are they going to be able to? And if we had a significant downturn in the economy, the odds are, depending on how bad that paper is, they may not. Which means that your favorite stablecoin may not be quite so stable, right? And this is important. Everybody says, oh, whatever. And they kind of ignore it. They say, oh, FUD, whatever. Anytime somebody says something. But it's not about that. It's about being realistic and being, responsible for your money, guys. What do you think the government do? You think the government's going to step in there and say, oh, you know what? This stablecoin, they owe you money because, really, guys, come on. And if you lose your money with that, then you lose your money. It is what it is, right? So you guys, anyway, this right here takes a look at the stable coins. The government released earlier this month their report on it. And so it kind of tells you what the government is looking at, why they're looking at it, the concerns they have. And so the important thing for you as a crypto investor here in the U.S. anyway, or with anything that's linked to the U.S., is that it gives you an understanding of how the government may be coming together and how it may look to regulate. And like I said, guys, if you're in the crypto market, man, that's something you should be knowing. That's something you should be understanding. So Mayor Brown here does a pretty good gloss over of what's going on there and what they're looking at. I also talked about it a bit in this week's newsletter, so you can check that out. Finally, guys, real quick here. Oh, man, this is a great tweet here. He says, Alex here says, I am befuddled by people pointing out higher than expected inflation prints as evidence that the inflation is not transitory. Transitory is a statement about the persistence of inflation in time, not about its magnitude. And this is exactly what I keep talking to you guys about. You know, everybody's like, oh my God, inflation's so bad. Well, yeah, the prices are rising pretty bad. Yeah, I get that. But that has nothing to do with the transitory nature of it. Right? So transitory just means how long is it going there? You know, is it something that stays permanent? You know, this significant thing? Or is this just like some big move up that comes back down? And so the time it was up is just short term, right? Transitory, right? You know, guys, the one thing I try and do here time and time again is to get you all to think beyond the sound bites that seem to permeate every inch of our lives these days. Everybody goes on sound bites, but the world, you know, sadly, reality is different than what the sound bites, you know, state. And so if you don't understand that and you're out there kind of, you know, screwing around and just kind of posting all these sound bites because they sound good when you don't think about it, because you're not. You're just posting, oh, yeah, look, money printer goes brr, you know, all of a sudden prices are up. Oh, it's because of the Fed, you know, whatever else. And, you know, and you don't take into account other things that are going on. You know, if you're serious about investing or trading, that kind of attitude is going to lose you a lot of money. So I'm just trying to keep you guys, just trying to help you guys here to get more level-headed, to not get taken by the emotion, because a lot of you guys spend a lot of time on crypto Twitter especially. And guys, I'm going to tell you what right now, until you actually divorce yourself from it and you leave it, you don't realize just how toxic and how full of misinformation it really is. Yeah, there's some good information out there. Sure there is. Sure there is. But most of y'all haven't been trading anywhere near long enough to be able to really differentiate what the good information is from the bad information. And that's a difficult thing, especially when it comes to your money. You know, again, none of these, you know, these big influencers out here, influencing is their job, not trading. Not investing, guys. Influencing. And, you know, and then you guys get upset when they, you know, when they sell you something, right? When they tell you to buy something that they're getting paid in, and then they're going to, you know, sell it maybe to you or something as you're buying it, right? But this is all on you. You've got to understand this. Influencing is a job. You know, they get paid to get your attention onto things. You know, most of them are not really traders or investors. Most of them. There are some that are, and then that's okay. But even those that are, you still have to be careful, because most still don't have any real background in trading. And I'm going to tell you what, if somebody comes in, they're like, oh, I've been trading in crypto for 2 or 3 years, and they use that as their, oh, I'm a good trader thing, you got to be careful with that, guys. Because if you're only trading crypto, you really don't understand markets. You maybe understand what's going on with crypto, maybe to some extent. But you know, you can usually find these people, they're very much, oh, it's always going to go up, it's never going to come down. Moon all the time is what they're talking about, these types of things. And that's going to get you to lose money, guys. You know, you always have to, you know, everybody's going to be wrong on the shorter time frames at some point, right? But you have to have an understanding that larger time frame, what may be going on there. So anyway, just some words of caution over there for y'all, all right? Oh, let me see here. What do we got? Man, oh man, look at that. The dollar just keeps on keeping on, right? Let me go ahead. We'll talk about that in a minute. Let me see what you guys got over here. Let's see. What's going on, GOAT? I see you. Good to see you checking in. TV Canal is here. It says finally bear market is here. Oh my gosh, that's too funny. Aramis, what's up, man? Table 1740 is here as well. Again, Tadeus, I hope I'm saying your name right. Oh, you did say I said it right. Okay, great, man. Great to have you here. First time here. Hopefully, you'll be coming back. Let me see here. Maddie says, so sad that he cannot enter the giveaway again because he won once. Well, you know, Maddie, you can always retweet the tweet, right? And you have your chance at $250 there, so you can win that still. Sure on there. By the way, guys, surprisingly, we have less people entering this week than we did last week. And the prizes are much greater here, you know, $1,000 in Bitcoin. So, hey, if you haven't yet, You got more of a chance right now than last week, that's for sure. Let's see here. Blockchain Gains, what's up, man? Not Z says Bitcoin negated the larger count, isn't it? Oh, I don't think so. We'll take a look at that. I don't know which larger count you're talking about, but overall, it's still in a very strong bull trend. So, yeah. What's going on, Tell You Rider? Let me see here. Oh, my gosh, I scroll all the way down here. Kind of catching you guys. Let's see here. Tell You Rider says, to be honest with myself, time spent on Twitter is nearly always a loss. It really is, guys. There's a lot of half-truths and outright lies there. And, you know, again, a lot of people get on there because they want something for free and they think that's going to do it for them. And then they, you know, they end up losing money and, you know, and they don't understand that it's because of that right there, right? Political Twitter's even worse. Political anything is worse. What's going on, Andrew? Yeah, DXY, man, almost at the top of that channel right there, right? So, you know, this is from my newsletter. And so I usually look at the dollar every week there. And everything's still working out as anticipated here. We got the pattern target off the wedge here. We're rallying up, just about to hit that R3 pivot on the daily, which coincides here with this ascending channel resistance. Again, we looked at the possibility of a head and shoulders here with the double head. So left shoulder, one head, two heads, and then right shoulder here, pull back, retest. And if that holds to be true, then, you know, we've got this target up here of around 98,725. Don't forget, we did break out above this 94,795 on the futures. I think it's 94.72 or 0.74 there on just the regular index. But we did break out above that, and we broke out on that on you know, on some good volume, some large candle spread breaking out through it. And so that's that first. Remember, we're looking at this count coming down, and this is my wave 4 on the way down. And so the breakout above that wave 4 is your first clue that maybe this is the bottom here. This is macro bottom back in January. No guarantees yet, but possibly, right? By the way, this rally up here that we're getting is invalidating. Let me see here. Yeah, if as long as we're closing above, let me see here. This one right here. This RSI reading right here. Right around 66.6 or so. As long as we're closing above that, then we invalidate this, what was a bearish divergence there. And, you know, again, continue to look up for potentially higher on that. But, yeah, so looking good here. As long as we continue to rally here, this 97.77 is the pattern, is the target there for this swing zone, from this swing low to this swing high. That pattern target's up there. So again, a lot of getting you up here. You can notice these targets we have, you know, that gets you right here at this support resistance area. And then, of course, this pattern target here off this potential inverted head and shoulders here is up here at this support level right there. So, you know, significant areas, find a lot of confluence in that. It's what you should be looking for, right? What's up, Hank? Hank says mid 180s for sure. I think he meant mid 80s. And then he laughed. Yeah. I mean, if we're looking at this, guys, and we jump on over here to the euro. Remember last week we were talking about this and talking about the significance of this support area here. And as you can see, dropping right on through it. You know, this is just the inverse of the DXY, you guys might remember. Let me see here. Do I have it on here? Oh, no, I don't. Let me throw it on here real quick. Remember, the Euro USD makes up about 58% of the weighted value of the DXY. So they're basically going to be inverses of each other. All right? Don't forget that. Let me see here. Let's turn this to a line chart here real quick. Oops. Make that log like the rest of it. All right. And so as you can see here, this blue here is the DXY, and you can see again that it's basically the inverse here of the Euro USD. So, you know, again, as the euro loses value against the dollar, in general, the dollar is going to raise against pretty much everything else. That DXY, that basket of weighted values in there, right? And so we've dropped down through this orange range here, which really increases the odds we're going to continue lower here. Kind of pull this up here. So yeah, I mean, you know, as it stands right now, we're still, I mean, if you were to look at this, let me just see something here real quick. Let me see what we got here as far as distance on this goes. Yeah, see, we've almost hit, if we look at this one and up here, we're just about to hit where this next leg down is equal to that first leg right there. Let's see here. And of course, this one's a little larger. So, okay, so what I'm looking at here is the possibility that maybe we've got a leading diagonal here. So we get a 1, 2, 3, 4, 5, okay? And in order for that to happen, wait, you know, this is 1, 2, so this needs to be like this. 1, 2, 3, 4, 5 here. Let me get rid of some of this color and whatnot. Change this off just a bit. Just do this. All right. So in order for this to work out as a leading diagonal, then wave 1 needs to be the largest, wave 3 needs to be smaller, and wave 5 needs to be smaller than wave 3. So if this is to be a leading diagonal, then we're going to have to see a reversal from right around the area where we're at. Because remember, if we measure out wave 3 here, just do a quick pull real quick, we're just about at that 1-to-1. So it's going to have to reverse off there. If it drops down below that, then this is not a 1, 2, 3, 4, 5, because wave 1, as we saw, is larger than wave 3 would be. So in that case, then we're maybe looking at this. We could still potentially be looking at this as an ABC here. Possibly. If we do that, then this C wave. See, now the real issue with this is the C wave's getting close to the 1,618. And so when it comes to corrective waves, the closer that wave C is equal to wave A, the more likely it is to be a correction. The closer wave C gets to the 1,618 or further extension of wave A, the more support it adds to the likelihood that it's a it's a 1, 2, 3. Because remember, wave 3 is the 1,618 extension of wave 1. So we're getting kind of close there. It doesn't mean that it can't be an ABC, but the closer it gets to 1,618, the more you have to look at it being a 1, 2, 3 potentially. Of course, you know, again, in this, could be a 1, 2, 1, 2 going through there. How you want to look at it. But the big thing is that we've dropped through this main kind of support area here. We're still heading down. In terms of pivots, everything else aside, in terms of pivots, here's the big thing. We moved in sideways between the pivot and the R1, bounced to the pivot, came up, lower high, dropped below the pivot, bounced up. So now lower low, lower high again, lower low. And so we're breaking down through that pivot. So generally, just trading pivots, I would look for price to target the S1 pivot down here. Everything else aside, forget waves and everything else. Just trading pivots, when you get something like this, where it uses support and then drops through it, usually that sends price at least to the S1 pivot there. And so this is the weekly, and so these pivots will be valid through the end of the year here on the weekly time frame. You can see that we're dropping down into oversold here on the weekly. We are oversold here. Let me see here. Interestingly, the last time that we were oversold on the weekly with RSI here was all back in this 2015 area. If you guys had paid attention, 2015, 16, right around there, we had a little bit of deflation at the time. And so that's potentially where we're setting up here. At that time, we actually broke down, looks like right around the August of 2014. Let me see if I can get this set up here real quick. There we go. I hit that wrong button there. So we actually broke down here, but then we continued to fall. Look at how it then went down a little bit more steep compared to what it was here. More steep here, and then really steep right here. Big move down, right? As we created this down here. So that overall, that move down was around, geez, I don't even know what is this. Oh, well, ultimately, let me get this over here. Ultimately, that actually hit us at, let's get it set up a little bit better here. ultimately price went down all the way over here. 22%. There was a 22% drop at that point. Now, I'm not saying that has to happen here, but let's say this weekly were to end down in there same way. We'll just even look from right here. 22% if you were to follow that. Get you right down here around that S4 pivot, right there around 87.5 almost. So as you can see, it's a pretty significant drop from where we're at right now. Now, I'm not saying it has to do that or anything, but I am saying that the last time that the weekly RSI for Euro USD dropped down below zero, or I'm sorry, below 20 or 30 there, got into oversold, was back here in 2014, which led to that deflationary period in 15-16, before, the short little deflationary period before it rallied back up there a bit. So, we've still got that going here. Other times where it's dropped in below, up here, and it dropped down around 10.5%. Let's see here. We had it over here. Dropped down around another 10.5%. So it looks like, anytime that we're dipping into oversold here over the last 10, 12, 13 years, it's dropped at least 10%, 10.5% or so, potentially, 20% there or lower. So, could definitely see it getting down here around this S2 pivot. And all that means is you're creating this range right here, right? So, this just becomes one big range right here. But, we're at the top of that range looking to get down to the bottom of it. So, I mean, just based on past performance there, over the last 10 plus years, it doesn't seem like a very good indication with the weekly RSI dropping down there into oversold. Let me see here. Hank says, like always, it will go to the mid 80s eventually on the DXY. He says, and I will do a gigantic told you so, even if it is 2025 by then. Oh my gosh. Esteban, what's up, man? Good to see you checking in. Yeah, the euro's just not looking very sharp at the moment, and we talked about it. Again, Lagarde is very much anti-wanting, at least makes it appear that they're very anti-raising rates anytime soon kind of idea, right? We talked about how they were behind the U.S. in terms of growth out of the pandemic. And, and that's what's important as far as the DXY for the value of the dollar goes, because the euro makes, that euro USD pair makes up such a significant portion of it. So, all these things kind of leading to where we're at. No real surprises here. We just need to see if we can continue this going now. And, again, if we look at euro as we just did there over the weekly basis last decade plus, it seems to suggest that we got, further down to go here. So, yeah, we'll see how all this ends up playing out here, but let me see here. Yeah, see, we could get a reverse here. I mean, we could look at this maybe as an ABC as a 1, 2, ABC is a 3, 4, ABC is a 5 maybe. Other possibilities here, 1, 2, 3, 4, 5 gives us a 1, 2. And then we've got a leading diagonal here for a 1, 2. And that's kind of what we have on the DXY, right? So we're kind of looking at this as a 1, 2, 1, 2 heading up, right? So a couple of different ways to look at this as it plays out. But like I said, generally, from a just a pivot standpoint here, we usually look for, dropping through the pivot like that. We'd look for it to reach the S1 pivot, maybe a little bit above it. We've got this 1.11796 area, which, as you can see here, works as support and resistance. Like clearly here from May of 2017, coming over here. So it might just get toward that area. Let me see here. If this is going to be a 1, 2, 1, 2, And this is important, guys, for everything you do. Cryptos, everything. But, if we're talking about dollar strength, right? If this is a 1, 2, 1, 2, well, then we've got a, 1, 2, 3 down here around 1.09568 kind of area. So this gives us a 1, 2, 3 down here at around 1.07. 1.073. And in that case, we'd look maybe at something like this, 3, 4, probably that 23.6 there. Get us a 5 then. A minimum wave 5 on that right here around 105 on that right there. Now that, what's interesting about that, that keeps us above the swing low here. And so if we were to do that, I mean, you could look at this maybe, let me see here. You might be able to get 5 on this here. And then you can get, let me make sure here. Yeah, about hits that 90% area. You maybe look at an ABC down, ABC up, and then 5 down toward here. So, I mean, there's still hope for the euro, not to drop below the lows over here in 16. But, we'll have to see how this plays out locally here. So, again, with what we're looking at there on this DXY over here. But man, oh man, yeah. So it looks like we're trying to get this. It looks like we've got a 1, 2, 3, 4. It looks like we're trying to finish out this 5 for this wave parentheses 3 here. Again, guys, generally speaking, this is pretty bullish right here. We moved in sideways on the 4-hour between the pivot and the R1. And then broke out. We didn't even pull back from the R1 to the pivot to retest it. We just pulled back a little bit and then rallied back up through it toward this R2. So, again, most of the time when you see this market structure here, this kind of price action with pivots, it usually indicates that we're heading up toward R4 or R5, that we're trying to run those pivots. So that, if that's to hold true, as it generally does, and again, it's not guaranteed, you can't guarantee anything, but generally, that's what happens. We'd be looking to get up here at 97.9 to potentially up here at 98.77 at least. So, and that, at that point, people are going to start feeling the dollar effects across everything. So, yeah. Hey there, WhiteR21, good to see you. Hank says that Peter Brandt mentioned 80 cents even based on the head and shoulders on the Euro futures. He mentioned 80 cents even. So that would get us down. I mean, that gets you down. It runs the pivots down here. I mean, I wouldn't be surprised to see it. Obviously, it's just kind of in line with what we were looking for or looking at anyway. Let me see here. Just trying to figure out how this might play out on the weekly here. That 80 cents will take us to new lows on the Oanda chart here, which goes back from, back here, wow, back in the early 2000s there, when the euro really started pumping up through the early decade there. I mean, grand scheme of things, again, if we just look at this big picture here, we've got resistance in this general area, which is where we're kind of at the moment. Locally, it's this little special piece of heaven right there. So if you're losing that, odds are we continue to go down there. But, yeah, I don't... I'm just trying to see... I'm just trying to see if there's some way maybe we can find something different there. Okay. Let's see here. Just block that idiot. Sorry about that, guys. Let me see here. Hey there, Crypto Girl. Good to see you. GT, good to see you as well. But again, if you look at the rally off here, it came into this previous resistance right here, which is where it's been rejected. And so locally here, after that swing low there, that rejection, support, it's trying to find support right here in this area right here. So yeah. I got it taken care of. I don't know why people got it. See, I look at that stuff and I'm like, man, when I see something like that happen in chat, I think, God, they've got to be like 12 years old or something. It's hard to fathom as an adult who's done something with their lives, who works and, pays bills and all this. It's hard to fathom adults acting like that. I mean, I'm sure it probably is an adult, but it really just makes me shake my head and just, you know exactly where those certain people are, in life in terms of, are they going anywhere in life or not? Probably not. It's just silliness. He must have been a Euro bull. I don't know. Still ridiculousness, guys. I'm just trying to keep you up to date with the, not really bullish, bearish, whatever. Just trying to say, listen, this is what we're looking at the charts here and what it may be happening, because then you can go from that to figure, okay, what may be other things that happen there as well. Because, sometimes when you look at the charts, you look and you go, well, I don't know, man. I've got this feeling that it could go up, but it could go down. I've got a real good feeling either way, or maybe not a real good feeling either way. And so seeing this other stuff may help you kind of lean more one way than the other so you can get your trading going, your investing going. Because, it's all tied in together. The value of that dollar is going to dictate, what's really, the value of the dollar really just tells you how people are feeling. That's really what it is. If it's risk off, people jump to the dollar, again. That's where they're going to go. It's hard on emerging economies because, when the value of the dollar rises, it makes, paying their debts that's denominated in dollars so much more expensive. And they're emerging economies, so they don't have a lot of extra to just kind of throw around and pay their debt, So, there's a lot of negative that could come to it. A strong dollar is good for U.S. citizens if they're going overseas or something, because everything's cheaper then. It's difficult for, companies, for, U.S. companies doing things here in the U.S. and whatnot. It has its thing either way, but I think the bigger thing from all that is where is the economy? What's it doing? In relation to whether that dollar is going up or down in value. Do I see Wyckoff playing out on Bitcoin daily distribution? Now let's listen, guys. If your thoughts of Wyckoff revolve around the schematics, don't think about it, because you're going to see a lot of people online that have no clue what they're talking about, and they'll say, "Look, it looks like this schematic." Well, if you actually study Wyckoff, what you find out is those schematics are just idealized price action, but even within them, you have to still understand the volume and price action relationship, because if you look at them, you can look at your distribution and your accumulation. They look really similar. So you get a lot of people online. Again, I tell you guys to stay off crypto Twitter because this is the nonsense you get. You get people online and they'll show you something like this, and they'll post a snippet of the schematic up here, and they'll say, look how it looks just like the schematic. Make no mention at all of the volume and price action. And that's what it's all about. There are literally thousands upon thousands of ways a range can take shape. There are. And so, I don't know what to say beyond that. I mean, there are literally thousands and thousands of ways that any range can take shape. So to just say, oh, it's accumulation or distribution because it looks like the schematic, you're doing yourself a real disservice, and you'll probably end up losing yourself money in the long run. So, I mean, when you guys think about that, just as a warning, if you look at it that way, because maybe somebody that you follow online said it and it seems to either worry you or align with your thoughts, I would just totally take it out of the don't even look at it. Don't even think about it, because without that price action volume relationship, the schematics tell you absolutely nothing. Absolutely nothing. Price may or may not follow them or something similar, right? So if we jump over here, I assume if they're just looking at the schematic, they're going, okay, buying climax, automatic reaction, secondary test, up thrust, and that's what they're thinking. I don't think that's what's going on here. For one, we don't have very large volume coming in at the tops. Again, it's all about that volume and price action relationship. The volume at the tops overall are pretty low. A good volume over here, coming in up there. You had some up here a little bit. This whole area here, though, you had nothing on the bottoms until right here. And then as it broke down, you see volume expanded with it. So, you've got that up here. It's all just there. I mean, you might have a local, you could potentially have a local distribution here. Like nice, but nice about, just kind of coming down here. But let's talk about this. If I'm looking at this, again, looking at just the pivots, we're moving in sideways between the pivot and the R1. We went up the R1, rejected, coming down. So now what we're doing is we're testing this low right here. And generally, with this bullish move up here, my approach here is going to be, well, as long as we're above that pivot, we should consider that price is going to go higher. Now, if we get a breakdown below this pivot, then it opens the possibility we could have a larger distribution here and still bring it down. But even that, I think you get kind of to this area here. So maybe that S1 pivot, if that, and then you rally back on up. There is so much base right here that it should take a bit to push through that if it were to come down. It should take a lot of volume to get through that. And there's nothing here screaming at me that the top's in at the moment. Could it be? Sure, it could always be, but I don't know. Even if we're trying to count this here, how do you count that then? Because you need 5 waves up, right? And so you have your 1, 2 here, and then potentially 1, 2 here. So, I mean, you should at least be looking for one more higher up at least. But within that, this is most likely going to be a 1, 2, 1, 2 because this is so much shorter. This is like maybe 1 to 1, right? So if we go here, we measure this out. Look at that. It's barely 1.236. It's barely larger than this one. It's nowhere near the 1618. So generally, if we look at that, we go 1, 2, 1, 2. Let me see here. What's going on here? Silvio, what's up, man? Good to see you. If we draw a channel on the weekly top in 2008 around the area to a lower high, it gives a 28% drop value for the Euro USD. Isn't all investing just gambling? Not at all. Not at all, low key. No. If you are, I talked to Discord about this the other day. Jesse Livermore at one point said something to the effect of, if you're anticipating the market, you're gambling. If you're waiting for confirmations, you're speculating. And so there's a difference in what they are. Yeah. Gambling is just doing what you're doing. It's not really, waiting for confirmations and stuff like that. It's just like, well, I think it's going to do this. I'm going to jump in it. If you want to be, I always preach this, guys, if you want to be in for the long haul, wait for confirmations. Sometimes you're going to miss something that just breaks down and keeps you running. That's why every Wednesday I'll teach our Tier 3 members different ways of different rules-based systems to get into a trend that's already moving. But the thing is, most of the time, more than half the time, at least, price is going to come back and retest the area it broke out of. So it's going to confirm that the breakout is legitimate. Occasionally, it'll continue going without it. But traders in general are so scared of missing those couple of times where it might go up without them. And so they jump in every time, end up losing all their money before the time when it actually does that, and then they don't have money to run with it. Again, guys, the difference between professional traders and amateurs is that the amateurs look at every breakout as like, oh my gosh, if I miss out on this, I'm done, right? Professional traders look at it, this is a job, man. And so we go, okay, well, the goal is just to make some money. That's it. It's not to make all the money on every trade. It's to find strong areas to enter, and then you get in before it takes off. And then you exit when it takes off. You exit in the liquidity, guys. Too many of y'all think, that even if you could get out at the very top, the odds are you wouldn't be able to, because there wouldn't be enough liquidity up there to get you out. Again, when you get to those final points, the market is often dry as far as being able to get you out there. And so it'll reverse on you and send you back before it can get you out. You've got to get to a lower price to find somebody willing to buy in when you're trying to sell. But professionals, they sell into strength. Amateurs ride that strength thinking it's going to continue up, scared to get out because they think they're going to miss out. And this is just the difference. Again, none of this is meant to be disrespectful or anything. This is all meant to give you guys an understanding of what goes on with professional traders and what goes on with yourself. And there's a difference in that. Professional traders try to get out in that strength. They're not interested in riding it all the way up. They might get out in layers. So they might take 50% at here, another 25% at here, another 25% at here, whatever, as it continues going up, right? But the goal is to get out in that strength. When people are in there pushing that up, it's being sold into. That's what they're trying to sell, trying to get out into. You want to get out when people are going to be able to buy. You don't want to get out when there's nobody left to buy and price sinks on you. I hope that makes sense, guys. Let me see here. Are we in a large channel on Bitcoin daily from the July low? Let me see here. July, this low right here. I think you're looking at this right here, I guess, right? Similar to that Ethereum channel, right? Yeah, there you go. Yeah, I mean, we're doing this. So you've got the high to the low to the high, some sideways here. Potentially head up lower, higher. And so what are we looking at? Well, when it comes to it, locally, this is kind of what we're looking at here, guys. So yesterday I told Discord, I said I was leading toward a target of this S2 pivot right here at the EQ of my demand structure. And that's where it hit overnight. I gave them 3 possible paths price could take. And I said, this is the one I'm leaning toward. And that's what we got here. But here's the thing. It's just rallied back up to this high volume node here. We haven't broken out above that. So I'm wary right now. I'm cautious about further breakout at the moment. If we can get some impulsive breakout above this high volume node here that carries price above the S1 pivot, which takes it above the descending channel EQ, that's the first clue then that maybe the bottom's in. And that'll give us a target of the descending channel resistance. Now, if we can break out of that impulsively, if we can break out of this channel resistance impulsively, which will also take it above this 4-hour pivot impulsively, that should indicate that the bottom's in and we're heading up. That gives you a pattern target of about $6,000 above the point of breakout based on the height of the channel here. Okay. Now you say, okay, well, what's the count then? Because if we look at this, we can see that RSI dipped a little bit into oversold here. Stochc RSI, of course, bottomed out and oversold. That's the 4-hour. That 1 hour was well down here. It came back up. But look at this. We're topped out here. But the daily's close. So your daily here, we've dipped down and oversold. So if it stays down here through the close of the day, then we'll have a close down and oversold. And then we can start getting, we can start thinking, well, now it's getting interesting. But in terms of where we are coming off this swing low down here, I've got 2 counts I'm looking. Excuse me, hiccups there. 2 counts I'm looking at. One is this one right here. And this one says, again, we've got our 1 up here, our 2 down here. And again, as I said, 5 up gives you a 1 here. So 1, 2, 1, 2. Okay. The way we think about that is generally your first target for wave 2 is your wave 4, the lesser degree. So in that case, that's this potential triangle here. Okay. Now, this is something as a possibility I mentioned to Discord back when we were around this area because we had all this overlapping, right? And I said, it may be possible that we're building a triangle here. But as price went up, we kind of left it behind at the moment then. But now we're looking at going, okay, maybe. Maybe we've got, this A, B, C, D, E. Oh, I'm sorry. A, B, C, D, E here for 4. And then you get 1, 2, 3, 4, 5 up here for 5. Gives you 1. And then A, B, C, right? So if we rally from where we're at here, we head up, then this is all good. And we look for a wave circle 3 minimum expected target of 106.805. Okay? So that'll be 1, 2, and then wave 3 of 3, right? So in this case, you'll probably get something along the lines of, I don't know, maybe this. Let me see here. Bring this down here. Yeah, look at that. If you hit the if we hit the 106.830, 106.805 kind of area, and we pull back, wave 4 may just hit this 84.515 area, which is your 23.6 retracement, which then gives you a wave 5 up here at about 123,000 almost, which is nothing more than wave 3 here. Wave 4 should pull back here, and then of course wave 5 will go up there. Maybe up to 150, maybe higher, Of course, it can overextend. But just based on this right here, that's what we kind of be looking at. Okay? So that's kind of where I'm sitting at the moment on this. As long as we remain above the swing low here, as long as we remain above this daily pivot. Remember, I talked about moving in sideways, rejected the R1 comeback, retest the swing low area here at the pivot. If it's a successful retest, we head up. And so that would be the count I think would be going on there. Now, the other possible count, if we've got further downside, it's going to be something like this. And this is something else I pointed out to Discord probably a few days back as this was continuing to come down here. The difference in this is instead of 3 up here with a 4 and a triangle and a 5, what we might have here is maybe a 1 and then a flat correction here. So ABC down, potentially ABC up, and then 1, 2, 3, 4, 5. And so in that case, we kind of look for this wave 4 kind of area here. What is that? 53,873, that kind of area. A little bit lower as your support. I think the 4-hour makes it look better here. Yeah, so in that case, what I said was, well, okay, well, if this is what's playing out, we might have the S3 pivot on the 4-hour or the S4 pivot. Somewhere right in there is where we would look for wave 2 to complete and then head up there. Now, if we look at that, that gives us a pullback here of about... the S3 is around 38.2. It's right there at that high volume node. The 50% is at 51.427. Now, it doesn't mean it can't come down lower. 61.8's at that S5 at this large high volume node here at around 48,300 or so. It could still come down there. But, again, you're looking for targets as it plays out. So if we lose the bottom here, if we lose that daily pivot, then we look at, again, maybe right around 55,500 kind of area, or here around, 52,100. And like I said, if it continues going down there, then we'll look at what's going on here and look at it potentially going lower. But until we lose that daily pivot, my thought is, okay, we're still on this black count right here. But I'm looking for a breakout above this EQ, above this S1 pivot to be that first clue. Prior to that, it doesn't make any sense to go long. If we get that breakout there, okay, now there's potentially an early long there. But what you really want to see then is that impulsive breakout above this descending channel resistance, H4 pivot there. And that should say, okay, that's done, we're headed up now. Again, if it does from here, it would be up there toward that 106.805 kind of area. I mean, so that's pretty simple. I mean, that's how it is. That's what I'm looking at as far as, targets on that right there. So Jared, if you want to change your degree on your Elliott wave counts here, you just have to right-click on it, go down. Oops, I'm hit there. Try it again. Right-click on it, go down to degree and change it here. These circles that I have right here with the little Roman numeral 1 and whatever, that's just the minute. And then the regular 1, 2, the large 1, 2 or whatever is your minor. And you'll notice as you go through these, again, the regular numbers, circle, parentheses, smaller circle with the regular number, parentheses with the regular number, as you come on down through it. But and as you go up, it's the same thing over and over again, just with Roman numerals and then regular numbers, like this here, as you do that. So yeah. Let me see here. You're welcome, Jared. Sure. Do you have any thoughts as to when the fees will go down on the ERC20 coins? Oh, yeah, no, I don't know for sure. As long as you guys continue to be interested in chasing NFTs and all that other fun stuff, they'll be up there. I think it's supposed to go down with that hard fork, right? Which is what, coming out in Q2 of next year? The Ethereum, the next was at London. I think it comes out Q2 of next year. Y'all might need to correct me on that, but I think that's when it comes out. And I think that will be the real decrease in Ethereum fees, I think. So, yeah. Let me see here. We're going to catch up with you guys here. Jordan, what's up, man? I see you checking in. Scrolling up here. Let's see. Let's see here. Can I show you how to set up my pivots? Venture wants to know. Hey, Venture, man, it's just simple. I don't do anything special. I just go up here to the FX symbol, click on it, type in pivots, and they've changed it now. As you see, it says updated. But just use your standard pivots. That's all I use. Now, there are other pivots that you can use, and they work fine. You just need to understand how to work with them. But, you can go in here and just go to your pivots and hit that little gear symbol there, settings. Inputs, right here where it says type. You see mine are traditional. You got Fibonacci, Woody, Classic, DM, and Camarilla. And they're all change a little bit because it's based on different methodology. But the idea of the pivots is just that it gives you prior areas of resistance and support. And so for me, I've just learned a long time ago to use traditional, and it works really well. But again, you can actually use, and we've taught different ways of using it with Tier 3 on our Wednesday live streams, how to use these different kind of pivots here, as far as using them as ideas of when to enter and or exit trades. So, there's a lot that you can do with it. Just find out what works best for you. Me personally, I just use traditional right here because I've used them for so long. I understand how they work. I have a real good feeling about how they work. Again, for a few years, that's all I did was trade pivots. So my charts basically looked. Let me turn off everything here. Basically look like this. I always had volume on, but basically just look like this with the pivots, and that's what I would trade. Which is why I still keep them on and why I talk to you guys about them and, the things that happen when they move sideways between them and what it's looking to do. Because after, I used them exclusively, about almost 15 years ago and been using them ever since, straight up with whatever else I'm doing. I've always had them on. So I've got a lot of experience with them, with the traditional ones on that. So just try to share some of my, things that I've learned over the years using it that way. It helps you when you've got all this kind of nonsense here, this kind of trash for account here, trying to figure out what it is stumbling all over trying to figure this out as it was building up. You can continue to use those pivots to help you understand what may actually be going on, and then to give you an idea of what your count may be based on that. Just just a little bit, just looking at a little bit different way to give you a little bit more help there. Let me see here. What's going on, Devin? Good to see you. Let's see here. So this is this. Let me talk about a few other things here real quick, guys. Let's see. By the way, I talked about this recently. It did drop back into the channel, but it looks like we've just got a 1, 2, 3, 4, 5, and then maybe an ABC here. And so if that's correct, my target's still legitimate here. Right here. As you see, that 2.0 gets right up there around it, right up around that high 30s, mid 31 kind of area. So still looking for it to head on up there. If you're waiting to buy on this PYR USDT, you can probably just wait for a breakout above. Let me see here. See, we just dropped down to the S1 and rallied back up through. We rallied back up through on large volume there. So demand caught up, continued up there. Yeah, I mean, if I was looking, I mean, if you wait for it to break out above 22.9476 here, that would probably be your safest entry there. Now, it might, come a little bit and pull back and then go, but that should indicate that the bottom's in here and we're heading up toward that, 31 and a half kind of area as it does that. See here. I mean, all this really did. It's really not even terrible, this dip back down into the channel, because it's just a wick. So, as you can see here, we rallied up, pulled back. The spreads found support there, and the previous candles there on that resistance. It just dipped down there, found a whole bunch of demand in there, and sent it right back up. So, yeah, if you want to get into it, maybe you wait till it breaks out through the top up there. If it drops down below the swing low here, then it gets real iffy about it. Then it's like, well, maybe not. But until then, you've still got that potential upside on that there. Heading through there. Let me see here. Silver. Here's where we're looking at silver. This is the daily chart. I think we might have a 1-2 in progress here. Might have got a 1, 2, 3, 4, slightly higher high 5 here. Because you had that big wick up to the top, and now we're giving this candle spread to the downside. We're crossing bearishly and overbought on the Stochk RSI. And we had a slightly higher high there, so that's fine. But yeah, you can notice, look at this. You have this strong bit of volume coming in here, which takes price up to the R1. And it didn't really continue. It just like, it tried here 1, 2, 3, 4 days. It tried to continue higher, and it just kind of got caught in this area. Couldn't make it through that 50% retracement, and now it's pulling back. So what I want to see here is we've got this 4-hour pivot right here at about 23,820. So if we're getting an impulsive breakdown through that, and especially here the daily pivot a little bit lower here at around 23.62 and a half, that's going to tell me that probably that wave 2 is complete here. And we want to see further breakdown below wave B here at 23.045 to kind of add confidence to that. But yeah, if we're breaking down impulsively below the pivots here, the H4 and then the daily pivot there, that should be a good first real clue that top's probably in. We're heading lower here. But then you add that confidence there when you break down below wave B. Gold's not too different. By the way, you can notice here that we've actually got this as a leading diagonal here. So 1, 2, 3, 4, 5, then ABC. Again, that 50% retracement. Gold still looking a little bit different on that. Let me see. We'll look at that in a minute. But locally here, again, looking at the same idea. Look at how similar it looks, especially with the current candle. And that, of course, is a product of the dollar continuing to rally. Gold and silver taking it on the chin, dropping down there. So again, with gold, what I want to see is an impulsive breakdown back into the channel. This could very well be just a bull trap here. Kind of breakout. Everybody's looking for this breakout, right? This channel up here starts back up here at the all-time high, August of last year. Taps it again here in end of May of this year. And then here we are. And then, we kind of find some support on the EQ here, and then we rally back up to it. So dropping back down into the channel would be the first clue that maybe we've got a 1-2, 1-2 here. But again, we're going to have to see a breakdown through, this daily pivot. Really, if you're looking at this, you kind of have this as an A, a B, and a C here. So, or not an ABC, I'm sorry, 1, 2, 3, 4, 5. So what you're looking for is the breakdown below this 1721.10. With your big picture, a breakdown below that should signal that price is heading down to new lows here. So you have, if you look at this, you've got these lows right here, right? You got these three guys right here. Boom, boom, boom. Support, support, support. So if you're dropping down below this this support here at 1721.10, all of a sudden that puts this support here in jeopardy because you've broken out above the internal swing high here. So you should kind of continue up. You shouldn't be dropping below this internal swing low. So if you break out above that and then it comes back down below that, that should put you, cautious about further upside. You should be looking at likelihood of losing support here. 1, 2, 3, 4 times the charm. Boom, break down through it. And then, of course, continue heading lower there. If this is 1, 2, you're looking for a wave 3 down here, maybe around 1446 at least on that. But again, this whole idea here would play out again, getting us way back down here below this swing low over here. Remember, my count overall on this says that we've got basically a WXY as A, and then a WXYXZ as B, and then we've got C still to come, so this becomes a flat kind of correction here. Or maybe you can even look at that as a WXY up here as well. But nonetheless, as a flat correction, which should carry price down below. Now, obviously, if you're looking at this, you see all this volume right here around 1280, 1290. So once you break down through this volume here around 1500, 1520, once you break down through that, you could get caught in this. You've got to actually get through that to get toward that lower. It's all in steps. But, that's what we're looking at here. This right here, as you can see, I pulled this off of... What did I pull this off of? I think I just pulled it off here. I think it's just the... I don't know. I can't remember where I pulled this off of. But I was comparing this right here with what we had going on over here. With what may be going on. And if I look at this... Oh, maybe I just pulled it off here and pulled it over there. Yeah, that might have been what I did. Just to kind of see at that time, that's what I did. The comparison between these two areas maybe. Yeah, as we were looking at there. But, maybe it's this right here. Yeah, the bigger side up there. But, it just, again, just kind of looking for patterns and things. Because people are, the market is just this visual representation of what people are doing, right? So it's just patterns. And, people tend to work in patterns. We tend to see patterns. We tend to pay attention to patterns, whether it's in songs. If you guys are musically inclined, you know what I'm talking about. If it's within music. If it's within art, usually there's a pattern to the way that art is done. Whatever it is, we tend to find patterns, pick up on patterns as human beings. And that's why they tend to repeat. But again, very good possibility this could just be a bear trap or a bull trap here. So we want to see, do we get that follow down? At least on the daily, it's got a lot of potential downside on that. But you want to see it come through, back into the channel here. Below the swing low, below the swing low, below the swing low here. To do that. So, I think either way about it, I would say even if this was to be the bottom over here and we were to continue up, we're probably getting a pullback sooner rather than later. And the pullback should at least come back down toward the channel resistance as support. So even if you want to be bullish on it, I think you got to be careful of that pullback toward that area. And especially more so if it does continue to break down impulsively below that. Carl Lopez, sup? Let's see here. Crypto Girl, I appreciate it. I try. I don't get much sleep. I try. I enjoy it. Helping you guys out here. Not that I'm always right. Again, nobody is. I'm sorry to break that to you guys. If you're new to trading and you think there's some way to guarantee you're going to be right or pretty close to it or whatever, you're going to waste a lot of money trying to find that. The holy grail to trading is two things. One, proper risk management, because you cannot possibly know the outcome of every decision that could be made by the market and every decision from that decision. So you got this big, huge decision tree. You can't possibly know every one where it leads. Two is taking profits religiously. Stop trying to buy the absolute bottom and sell the absolute top. You see this right here? Get in once, twice, three times along the way here. Don't worry about buying here and selling here. Lock in, lock in, lock in. If you can do that consistently, it's going to put you, it's going to have the opportunity to set you way ahead of anything else, right? Think about it. If you're always trying to catch the swing low and the swing high, especially if you're new, you're not going to get it. Even when you've been doing it for decades, it's still very difficult. That's why we don't worry about it. Professional traders don't really worry about that. If we can get it, we can get it. That's great, but we're more concerned about finding a good entry in the trend. A good entry where the cost of getting in, the potential to be wrong is not that high compared to other entries. We're looking for those higher confidence trades. Get in, book some profit, get out. Keep doing that. Time and compounding will get you where you want to go. But that's why I keep telling you, there's a difference between professionals and amateurs, because professionals kind of take this as a job. We're going to do this day in and day out. So we're not trying to get rich by tomorrow or next week or next month or next year or whatever. We're just going to figure out our system, use it, lock in those profits consistently, and time and compounding take care of the rest. Amateur traders have a different mindset. They're trying to get rich yesterday. They admit it, guys. You guys come in. Most of you got in because crypto prices were flying, right? And you thought, man, or meme stocks, right? And you thought, man, I got to do that. I got to make millions of dollars. I can do that. But you're not, right? And unfortunately, it's just the way it is. I don't know. Guys, it's all in how you look at it. Okay? But if you want to look at it in a way that it's going to make it profitable for you over the long run, that it's going to make it something that you do today and you can continue doing next year and the next year, the next year, and actually making profits at it, then you look at what are the professionals doing, not what all the other amateur traders are doing, not what most of crypto Twitter is doing. I'll tell you what, guys, those of you that have been around since 2017, most of the people disappeared, right? You had a lot of influencers there at the end of 2017, right? And they disappeared over the next, over the bear market, didn't they? Few of them popped up all of a sudden again now, but most of them are gone. They've never come back. Very few of us are still around, in the grand scheme of things, as we were prior to that. So it is what it is, guys. You got to take responsibility for what you're doing and how you're doing it, right? Now, the other thought I want to give here about gold, and this is something I haven't shared yet, but it is the possibility, if we're looking at this, let's say this is one, this is 5 waves down, 1, 2, 3, 4, 5 here. Is it possible maybe that this is an ABC, an ABC, an ABC, and if it is, well, now we're looking at what? Triangle, right? Right? So the triangle says, okay, well, A, B, C. Oh, geez, doggone, I used the stupid wrong one again. But, this would be A here. And then the triangle would be B, right? So you go A, B, C. And then you'll have a D, and then you'll have an E. And then you'll continue lower there, right? Let me kind of turn this, change this over here. You know what? As a matter of fact, let me just do it this way. Let me make a copy here. That's a 16. Let's do it this way. All right, so in this case, what we'd be looking for here is, all right, so we'd have A here, and then B, and then C, right? C here. There we go. And so with this, again, you'd just be looking at this is just an A. This is just a B. This is just a C. You're looking at D and an E, probably something similar to that maybe. And so, yeah, you've got something like this playing out here, right? And it's something like that. Again, generally your pattern target's going to be the widest point of your triangle. Whoops. Yeah, pretty close to it. And that's going to be placed at wherever wave E ends. So I would think wave E might end at this high volume node here. And so that would give us a target down here, interestingly, of only about 1,550. So, I mean, this still remains a possibility here. But notice that kind of area gets you around these low 1500s here of this prior area. So you have this resistance, which where we have here, pulls back, pushes up, pulls back to this area again, pushes up. So within this right here, it is possible that maybe gold is just doing an ABC right here. In which case, this would be 1, and this would be ABC as a 2 here. So there are still other possibilities, guys. And so I'll be watching that as it plays out. If this continues to print 3 waves, sideways for a D and an E, then we'll be looking at it. Now, this is just a pattern target based on the height of the triangle. It does not have to get to that point, and it doesn't have to stop there. It can go further, or it can stop shorter, okay? It's just an initial target that we give based on that. Sometimes it does do it, and then it, reverses. So it could continue again, heading lower down anyway. But just just one other thought there for gold. If you're a gold bug, or if you think you might want to become a gold bug, or if you're just interested in trading the market. But we got to look for a reversal from where we're at here, heading back down into the channel. That'd be the first thing. Let me see here. Yes, I did stay the whole time. Jello Man, what's up? He says, trading every day with small amounts and taking notes, but most importantly, just making many small trades till I get a little more comfortable. I mean, but see, you got to understand, guys, that's the way it is, man. That's what you should be looking to do. Think about that. Think about yourselves and what you're normally doing. You're normally thinking everything all in, YOLO, let's get the big win. You're trying to make everything you can every single trade, right? But a lot of the most successful traders out there are doing the opposite. They're not expending their whole account on every trade or anything like that. They're just doing a small bit. And they're making a trade. And they're going. Because if you lose that small bit, it's not a big deal. Right? And if you win, you're making money. And what did I tell you? I said, time and compounding. That is the secret sauce, guys. It's not some kind of special system that you think that knowing it is going to make you a better trader. Or that it's going to make you the best trader. It's going to do everything for you. To make it easy, right? Indicators, all these things, you have to learn how to use them properly. And even then, they're not 100% correct. So if they're already not 100% correct and you don't know how to use them, then, you kind of amplify the amount of times that you're going to read them incorrectly. But as a trader, you shouldn't be trying to put everything into and getting rich tomorrow. That's the problem, guys. And most of you guys are not going. You're going to hear me saying this, and you're not going to listen. And you're going to move on, and it is what it is. But at least I can say, you know what? I tried to tell you. How do I know? Because I've been doing this as long as I have. You can't do this for any amount of time if you don't understand these things. If you're trying to do it the other way, that's why you don't stick around. You can't possibly stick around doing it, without without the reality of what I'm talking about here. It doesn't happen, guys. But, again, you come in and everybody tells you that you can, make money overnight, that you can be rich overnight, and you see 1 or 2 people maybe do it, but you don't see everybody else, most of the market, not doing it. But you see that one person, that 2 people do it, and you're like, oh my God, if I could have bought that NFT back in May, I'd be worth, $5 or $10 million now. Or if I had bought whatever it was, $3,000 of SHIB a year ago, I'd be worth $5 billion today, or whatever that thing is. But see, this is what I'm trying to get you guys to pay attention to. That's what you hook on. That's what gets your attention. You don't think about the rest of it, the reality of it. You think of these pie in the sky, hopes and dreams, which are not realistic. They're not. If you had to bet your life on that, would you do it? And I hope the answer is no. It's kind of the way you should look at trading. Especially when when your thought is, oh, I need to put in all this money or trade, or go in here without confirmation or whatever. Just think back and say, if I was wrong and I were to lose my life for being wrong, am I still willing to do this trade? And you should say no. I mean, if you're honest with yourself, you should say no. It shouldn't, But it's always about, again, as I say, man, trading is easy. It's simple. It's not easy, right? It's simple. Movements between liquidity. It's not easy, though. You got to fight yourself. You got to fight your emotions and your own, your own subconscious kind of kicking in. And most people don't do that very well. Okay? Let me see here. What's going on, XRP Bandit? Good to see you checking in. Let's see here. GT says World Bank's reclassified gold as a tier 1 asset. Palantir put it on their books. Elbow cough. Blockchain Games, what's going on, man? I think I said hello, but hey, hello again. Wazobia, I see you checking in. TV Canal just comes in every week to ask about .USDT, doesn't he? Let's see here. .USDT. What do we got going on here? What's happened since last night? Oh, we did have the breakdown last night. Okay. So I talked about that possibility of that breakdown last night. Let's see here. This is the 4-hour. Get up there. Nothing special going on there. Again, like Bitcoin kind of just stopped right here at this high volume node. This one's right here where the previous support was. So, yeah, the count is not correct here now, obviously. Let's see. Let's pull this back up here. I don't think that hits 90, does it? Nope, it's just 786, so there's not a flat going on there. Yeah, let's see. So we got 1, 2, 3, 4, 5 down. Looks like coming up there, right? So what could potentially be happening is we've got an AB, and then an ABC is 1, 2, ABC is 3, 4, ABC is 5, and so if we're getting a breakdown below the swing low here, I'm looking at that S2 pivot for a possible reversal, and potentially the 61.8 retracement at 34.22. That's what I would look for. Other than that, an impulsive breakout above the 4-hour pivot here, 1 and 4-hour pivot right there around 47.59. That should indicate that the bottom's in. So you're looking for larger candle spreads on the breakout, volume on the breakout. If you can get that above that pivot, no matter what's happening down here, if you can get that, that should say that the bottom's likely in and we're heading up higher. But until then, I'm looking at probably getting down here, maybe the S2, maybe the 61.8 here. Obviously, it could continue lower, 78.6, but if this is going to be an ending diagonal here, let's see here. Then, as you can see here, I'm going to pull this up a bit. It looks like we've got maybe an ABC is 1, 2, ABC is 3, just short of the wave 1 there. And then a 4, and then we should have a shorter wave 5. Because this would be, like, kind of like this here. So it'd be a descending wedge is what we'd look for, ending diagonal. And so, you can get that down there. Wave 5 should be shorter than wave 3. If wave 5 is longer than wave 3, then this is not any diagonal here. And we'd have to figure out what other count may be going on. But yeah, like I said, right now, everything else aside, looking at further down toward potentially the S2 pivot here or that high volume node right there. But if it does rally impulsively above that H4 pivot, then we should be looking for it to go higher at that point. The bottom's in. Let me see here. Moogs, what's up? My settings with VPR. Right here, 384 row size, 70 value area volume, of course, and then 17 is the width of the box. So that's what I use there for that. Let me see here. Just kind of catching up here. Flashback Nation, what I was describing was you. I mean, and that's one thing I want you guys to understand, man. I used to say this a lot, but, here's the good thing. When you're starting out as a trader, you're not special. You're going to do the same things that pretty much every other new trader does. But that's good in the idea that, you know what, now you can say, okay, well, if everybody else is doing it, then I'm not doing anything different, and now I can forgive myself. But that's also your wake-up call that you have to do something different from that point on. Now you've got responsibility to do something different. But, I see too many new traders come in and they get all down on themselves because, they're doing these same mistakes that other ones are doing. But they shouldn't be. Again, it's just the same mistake everybody else is making. It's okay. You learn from it. That's the goal. If you're not learning from it, then that's the mistake. By the way, you say, well, how can this go up here, Chris? If this is how can this be the bottom with this here? Well, this could be an ABC and then an ABC, so a W, X, Y correction is how that would work. So if that's the case, if this is an ABC down for W, I'll put this up here and then, ABC down for Y. You see the 1.0 wave Y here would equal wave A or wave X. W, I'm sorry. Wave Y would equal wave W here at 36.93. It's right here at this previous resistance right here. But, again, guys, we often look for wave 4s and wave 2s to pull back to wave 4 the lesser degree. That's our initial target. And you can see that's where we've kind of hit here. So, just some thoughts on that there as far as DOT goes. Let's see here, Bitcoin. We'll see how that plays out there. We'll get that other account, of course, as well. Let me see here. XRP Bennett says, I'm lazy. I just buy every month and move it to my ledger. And that always works. That's not a bad way to, to work with Bitcoin, guys, or in crypto in general. As long as, it continues going up. You just have to be aware of when the bottom, or when the top might be coming in. Obviously, you don't want to have to hold it, for a couple years when you could get rid of it and then buy in lower if that's your thing, if you don't have like a significant multi-year kind of outlook, 10 years target kind of thing. In that case, you just leave it and let it go with it as it does, right? Let me see here. Yeah, Flashback Nation, man. Just try not to stress out about it. A lot of the mistakes that new traders make, amateur traders make, is that they don't recognize that they're just doing the same thing everybody else has done, and then they, that you should change that. New traders often are not very humble. They think that because they can get in the market that they know what they're doing, or it's easy to know what you're doing. Again, trading's simple. It's not easy, but it can be done. But it's like any other skill. You have to put in the time and the effort, and you have to, practice. And you have to practice correctly. Just because you're trading for 3 years doesn't mean that you've practiced correctly. If you're still losing money consistently, well, you're still a new trader. You're still an amateur trader. You haven't figured out yet how to make that happen, more consistently. That's the real difference between amateurs and pros, guys, is just profiting consistently. And for some people, it comes a little easier than others. But, again, we're fighting against ourselves. We're fighting against our own emotion, our own psychology. And that makes it difficult. We have a lot of time, a lot of difficult time admitting that we may be wrong or that we don't know what we want to believe that we know, right? So, and it's funny because you think, especially with things that take licenses like doctors and lawyers and things, you think people would be more willing to say, you know what, I don't really know what I'm talking about. But, everybody's out there. Everybody knows the law, right? Everybody thinks, oh, on the page it says these words, so that's how I'm interpreting is what it means. And rarely is law interpreted that way. Take it from somebody who's got a law degree. Legalese is very interesting. It's rarely what you think it is. But, people think they know it anyway because, I can read it. I've got access to a book that says this is the law, so that's what it means. And it's not. Same thing with trading. People get in and they pontificate on what trading is and how it really works, and they don't really know. Same thing about politics. People tend to believe that they know what's going on with politics, and they don't have any kind of real background in understanding how the system works. Same thing with economics, right? Again, there's very few people out there in the grand scheme of things who understand how the Fed works. How does money get from the Fed to you? There's a process. And the law makes it work a certain way. It's not simply the Fed printed $1 and you magically have $1 in your hand. That isn't how it works. But again, everybody you see online, and maybe you've done this yourself, you think you think it's real simple. You think it's this real simple money printer goes burr, there you go. And it's not. It's so much more intricate than that, right? Because you have laws, and you have laws that say that the Fed can't just give you $1. That money, your laws basically state that money creation happens at the banks. That's where the real money creation happens. And then, you start looking into things like, if you're like me and you're really interested in learning other points of view, whatever, you start reading things like modern monetary theory, right? MMT. And you start going, okay, so this is what they think. This is how they see it, right? And some of what they say makes a lot of sense. Some of it does work, right? But here's my thought. Even if MMT were correct, 100% fully correct, it's just an explanation of how the system is working. It's not, it doesn't mean that the system is going to continue working indefinitely. You see what I'm saying? You can explain how the system works without saying, oh, just because I've explained it, that means it's going to continue working. But there's a lot of stuff that goes in there. I'm constantly learning new stuff, guys. Sometimes it may seem like I know a lot about a lot, and I do. I know quite a bit about some things, not a lot of things, but some things. But even within that of what I know, I still know that I don't know anywhere near enough. And so I'm always trying to understand better. Because guess what, guys? Nobody really in the Fed, in government or whatever, really knows exactly this system that we use, what the effects will be and how things are put out there, whether it's through government handouts or through stimulus, stuff like that, or whether it's through the Fed and what they're trying to convince the markets to do with the way that they act and react and whatnot. Nobody really knows what all these effects are going to be. So we do the best with what we have. We say, okay, well, historically, when this happens, it usually leads to this, to this, to this, because the money must flow in this way. But then when you look at it, you go, okay, well, so the money must flow in this way. So what does that mean? Is there really an issue with printing too much? Yeah. But only to the extent that it makes its way out to the broader money supply and it's used. You can print all the money you want and stick it out in the broader money supply, but if it just sits in the banks as deposits, you don't have more money chasing the same limited supply of thing, whatever it is, the good or service that you're looking for. So if you don't have that, then any rises in price must come from somewhere else. Or if you only have a little small amount of that and the rest of it stay in deposits, then that little small amount, is part of it, but there's something else also involved that's really giving you these price increases, right? Stuff like that. Everybody's talking a lot about the quintillion effect lately, right? The idea that where money originates determines, how successful I guess that money injection is, right? And basically the idea being that it's the same thing I keep telling you guys about. I've talked to you guys about for the last few years now, that QE, the worst thing about QE, I think, is that it makes how do I say this? What's the word I'm looking for? The discrepancy in wealth between the haves and the haves not is exaggerated with QE. Because what happens is, again, if you understand the way that money comes into the system, right, most of what comes from the Fed goes through your primary dealers. These are your big commercial banks and whatnot, right? And this just becomes an asset swap thing for the most part between that cash and the treasuries. And we see that with the reverse repo facility and how much money goes into that overnight, okay? Now, I'm not going to go into this big, huge thing explaining how all that works. Again, sign up for my newsletter. Go back to the past the past issues. I've explained a lot of it there, as well as on my timeline and in previous, things that I've done here with you guys. But at the end of the day, a lot of that, most of that money, already goes to the people who already have. That's why your asset prices rise during QE. Because the money's going to those who already hold, right? So the wealthy get wealthier. And if you look at it, again, I've talked to you, everybody's like, oh, look at all this money that the government sent on stimulus payments. And I've told you time and time again, that was so small in comparison to how much money actually came out into your primary dealers. So it's like, here's $100 for the primary dealers. Here's 50 cents or $1 for the common folk out there, And so the wealth effect is much greater to those closer to the Fed. So the primary dealers, they benefit much more from those dollars coming out. Now, eventually some of that comes out into the economy. And so, it goes in there and it makes its way around, and people in general get maybe a little bit of an effect from it. But the real effect comes from the first people getting that money. Everything else is very insignificant afterward. Because it's after that money is coming out, as I've told you guys, when it hits that broader economy, when it starts getting used there, then prices are rising, right? But as long as that money sits in the bank, it doesn't do it. So, your primary dealers get it really before you guys do, right? And so they're out there buying stocks and whatever and doing these things and buying treasuries and all this. And then they're increasing what they're worth because then they're going to sell it, at a profit. But you have your little bit that you get, and that's really it. So, again, understanding how the Fed actually works and how money creation actually happens, a lot of people don't want to go into that depth because it's sometimes complex depending on what part of it you're looking at. If you're looking at bank laws and SOFR and stuff like that, SOFR, all these different laws and regulations and, how the Fed has changed from, the 1950s to now, how they look at bank reserves and the required bank reserves and how they've gone from individual bank reserves now to total bank reserves, total deposits, all these things. And, and so when you look at that, there's different ways of kind of explaining what's going on there, but none of it is money printer goes burr. And then that's the reality of it. Yet think about it, guys. Most of what you see is money printer goes burr, right? Most of what you hear is money printer goes burr. So let's extrapolate that in life and understand that most of the way, or the way that most people think things, whatever the thing is, works, is most likely incorrect. Because people just continue to spit out sound bites. Nobody really goes to learn. And this is the reason why, what we do, our membership is so much lower than these paid groups and these shills and whatnot out there. Because people don't want to learn, for the most part. They want to be hand-fed, guaranteed success, which they don't get there, but they do it anyway. They tell them what they want to hear. But this is where we're different. This is where, people come to us and they can get jobs trading, for real companies if that's what they want to do. Or they don't have to. They can trade for themselves and be fine. But you're not going to get that with those others, because that's not their interest. Their interest isn't in bettering you. Their interest isn't in helping you become a better trader investor. Their interest is in getting your money. So, I mean, that's kind of where we're at with all that, guys. So whenever you're thinking about it, understand that that's what makes us different. That's what we do different at TWC. And I think pretty much anybody that's in there will tell you the same thing with that. Let me see here. Let's see here. Hey, have a great day, Mark. Can I check out XMR BTC? We can check that out. I'm not sure the Bitcoin pairs are doing so great just yet, guys. Let's see what they look like here. Oh, let me see. When was the last time? Have I looked at any time recently? Oh my gosh, no, I haven't. All right, well, let's just create a new chart then, so we can find. All right, I guess we can jump on Binance there, kind of see what we're looking at. Remember when Monero used to be like the thing? Remember when Dash used to be the thing? And I remember when I first came in early 2017, we were trading Dash on Poloniex before old Justin Sun got it. You know, and man, I remember watching that thing rally up there from 20 somewhat dollars or something up to, you know, hundreds plus. That was a lot of fun. Oh, let me see here. Yeah, I mean, it looks like we've got a 1-2 here. What's this retracement so far? Yeah, just around the 78.6. A little bit beyond that, it's that retracement right there. So that's looking pretty decent at the moment. I mean, long story short, guys, you're looking for a breakout above that line right there, off the top, and then this week of August 23rd, 2021. You might be able to get in a little bit early looking at this one right here. And so, again, that comes off that same August 23rd week, and then the week here of 27th of September. Let's kind of zoom in a little bit. Wave 3 here should be bigger than wave 1. It is. Wave 5 is bigger than wave 3. Looks like a expanding, broadening wedge here. So a leading diagonal. That's what it looks like. 1, 2, 3, 4, 5 maybe. And then A, B, and then C down here. So this gives us a 1, pull back for a 2 into this daily demand structure here. Or this is the 3-day demand structure right here. Kind of deep into that. What do we look like on the daily? There we go. It's possible this right here, maybe even just a 1, 2, or a 1 and then A, B, and then C here is like a expanded flat. So let's get you a 1, 2, 3, 4, 5 here. So, you know, locally here, breakout above that resistance right there probably be your first clue that that bottom may be in. And you want your stop loss to be no lower than right below the swing low here. So that swing low right there is 0.003936, so 0.003935 is where you want your stop loss. No lower than that. Because if it breaks down below that, it's probably going to take this out, which changes what this may be here. This may just be an ABC, and we're heading down, you know, at least to the S1 pivot here. If we do, as a matter of fact, if we break down below that swing low, I'm just thinking right here, S1 pivot on the daily, 003672 kind of area. But if we do rally off here, looking for a breakout above here is your first clue. But your impulsive rally, your impulsive breakout above the daily pivot at around 0.004715, kind of area. The impulsive rally above that is really your big clue that, okay, the bottom's probably in, we're heading up higher. But, you may be getting a little bit early here, but again, your stop loss just that one below, 0.003935. Because once it breaks down below that, it's likely to break down below here, which means probably a target down here. And maybe even lower. But yeah, I would look for a breakout of that descending resistance, and then definitely an impulsive breakout above that pivot. Expanding volume, larger candle spread to kind of set you up. You can have an initial target right here at around 005625, right there at that high volume node. And then up here, next target up there at about 006256 kind of area. That's where I'd be looking on that breakout there if you get that. So, let's see here. Oh, now you want XMR USDT? You're killing me, man. I just went and looked at this. All right. Check it out here real quick. Man, I'm a nice guy. Woo, look at that big old, everything else kind of dropping down there. In terms of this range right here, this here becomes a potentially a bullish SFP right here, swing failure pattern, because you just dip down and rally right back up below the swing high, below the range low there, back up. And so after this candle closes, you want to see some follow through above the pivot. That's probably a good indication that we're going to head up from there. Let's see here. So off this bottom here, we get this rally back up here to this top and then back down. Yeah, we want to see, do we break out of this range here? Do we break out above? Really, it's kind of, well, we can just go through swing highs just a little bit higher there. Right around the R1 pivot there at 299. Really want to see a breakout above that. And the stronger that breakout, so the more volume and the larger the candle spread's breaking out through that, the stronger likelihood is that bottom's in there, it's heading up. And in which case, of course, then you're going to look for this kind of area up here as your initial target. Right there around, 454.5 to 471, 472, right in that area. You get through that. But you want a nice impulsive breakout up through that, that'll carry you through that swing high to continue it up. If you're getting above, I mean, this is definitely what you need to get above. Getting above here is only the first step. You need to follow through because this is your swing high off this drop down. This is your interior swing high right here at 339.70. So you got to get above that to kind of step up to that next step there. You break out above there, then of course things look good. Until then, you're just kind of stuck in this larger range, really. Right here. This is the range. Not just the local thing here, but this is the range here. So coming off the swing low here, you have your low, your high, your higher low, your higher high, potentially a higher low here. So you've got bullish market structure coming off the lows here. So again, you just want to see that continue up with that breakout that we talked about here, and then here, heading up to here, and the breakout there, of course, leading it higher. Let me see here. A little bit of volume at your lows, but even those mostly are staying pretty subdued. So not a lot of selling into those lows. You're getting your volume coming in, up here on that breakdown there. And then, of course, you've got this one right here as it rallies back up and it kind of hits that area. A bit of volume there. And as it comes back down there, of course, right before your swing low there. Got a little bit of volume here, but you see how that volume drops off as you get lower? You're not having continued selling into the lows. The selling is dissipating. And your demand is showing up. So, if you're looking for further down, you should see volume continuing to increase into the lows here. You see volume rallying up rather than dropping down. Right here, though, volume down, rallies back up. Again, if we look at these kind of areas here, boom, boom, and boom. Volume here, lower volume on the next one. The breakdown gets you some decent volume, and this is the daily, so it's still got a few hours left today, so it could end up higher than the previous volume. But that would be a good thing. If you have a large wick like this, you have a lot of volume showing up there. That's a good signal of probably a reversal in this area. So again, locally it becomes this daily swing failure pattern here with this local range. So yeah, I mean, I think it looks pretty decent at the moment. We just want to see that follow through, as I talked about, getting us above, each step here to increase that confidence in the idea that bottom may be in there heading up. So yeah. Anyway, guys, man, it looks like we're just about done here. Let me see real quick. Let me see if I can throw a real quick, what do you call it here? Stock market chart in here. Yeah, it's so easy for me to say, right? Words are hard. Oh, okay. That's the Discord channel thing. Let's try this again. I don't know how I got that. Okay. All right, there we go. All right, so we've got this rally continuing up here. Let's kind of zoom out a bit. Oh, let me zoom back in again, I guess here. Let's see, the 1 hour is pretty high up there. We were looking at the possibility of maybe the two being done here, but potentially not. We had to see it, continue on down. It's just an ABC down there. 1, 2, 3, 4, 5. Looks like the rally up, though. This could be 5 waves up here. 1, 2, 3, 4, 5. It could also be 1, 2, 3, 4, 5. So A, B, and then this C here. So what we want to see is, does this break out through the all-time high up here at 16,053, or does it head back down here below? We're looking for an impulsive breakdown below the pivot. Looking for price to come on back down below that. If it can do that and drop here below this swing low at 15,778.31, that has a good chance of indicating that this was a 1 and a 2, maybe the top's in up here, and we've got a 3 coming down below. But we need to see, do we get that drop down below this area right here? And we're looking for impulsiveness. Again, we're looking for, well, we don't see the volume on it, but we're looking for larger candle spreads dropping down through that. You can pull up the E-minis and look for the volume on that, but with the index itself, let's look for these larger candle spreads down through it there. But again, possibly top, but, until we get that confirmation of heading down lower, we could still potentially head up higher. If we were to get, I'm trying to think how this would work out. If we were to get the stock market highs, if they're in or nearby, but crypto isn't going to get a high until Q2 or Q3 of next year, the only way I can think about that, it's weird. It would be weird that crypto would come in after stocks just because it's more risky. And again, when you enter a risk-off environment, the most risky assets are usually the first to go, right? So maybe in something like that, we could have a wave 1 down by that time, and the wave 2 back up would be crypto's last run up. Maybe. And then it would diverge with the stock market. It would make that higher high, and the stock market make that, of course, that lower high on the larger picture. But it's kind of odd to think about that. So if crypto is to continue on to Q2 or Q3, I think, there's a good chance we could still see stocks continuing up into that as well. Not that they have to do anything massively heading up there. They could just kind of just be sold into as they're heading up higher into these areas now. If crypto is to find a top this month or next, then, the stock market could be at the top or very close to it. And that makes, that would make a lot more sense. But we'll see. Again, I have no definitives about, the crypto market going to continue on into 2022, or if it ends at the end of this year. We're just going to play it as it goes and work with that. Oh, this was the NASDAQ composite. I'm sorry, this isn't the Dow. Let me pull up the Dow here real quick. All right, there's the Dow. Yeah, this looks a little bit more what I was looking for here. Again, with the Dow, you can notice that we've got a bigger move down, a more clear potential 5 waves down here. And so, with here, we're only come up 61.8%. We've got potentially an ABC done here, ending diagonal. 1, 2, 3, 4, 5. So what we're looking for here is a breakdown below this swing low at 36,166.37. If we get a breakdown through that, that's your first clue that wave 2 may be complete. Impulsive breakdown through the pivot that carries it below wave B support at 36,031.78 is going to add confidence to that. In that case, we would be looking for a wave 3. If that ends up being the top there, like I said, is an ending diagonal for wave C. Wave 3 is going to be up here at 35,261.50. And so that should be our minimum wave 3 target there. That will carry it below wave 4 of the lesser degree here. If this swings out at the top here, if this is 5, then wave 4 of 5, it'll take us below that, which, kind of says wave 5 is complete right there. At least, yeah, that wave 5, yeah, because it can't subdivide any further to head up. So, the Dow gives a potential better look at what may be going on in the market. The NASDAQ and the S&P, they could still go higher, and the Dow still remain not with its high already in. It would just be a non-confirmation among indexes. And of course, as we've talked about prior, oftentimes when you have one index making a swing high and the other one's not, or whatever, it's an indication that maybe the top's in. And so we'll watch for that as well. But yeah, right here, we'll see what goes on with this. We'll see if we've got an A, a B, and a C here. We need to drop down below wave B at 36,031.78 to kind of confirm that. So that's where we're looking. Anyway, guys, I'm going to get out of here. I'm running late. I hope you guys have a great day, that you all trade safe. As always, remember, the only thing you control in the market is how much you lose. So risk management in all facets of the word is the most important thing you guys are going to do as traders. You should spend more time, doing your risk management, creating better risk management than you do anything else. The flip, most amateur traders spend more time trying to learn Elliott wave and Wyckoff and all these other things, and very little time, if at all, working on their risk management. But the risk management is actually where you make your money. And so the better you are with your risk management, the more money you stand to make, the less money you stand to lose, which means you get where you want to get faster. So if that's not convincing, I don't know what to tell you guys. But I hope you guys have a great week as always. Trade safe. Join me tomorrow. Like I said, I'll be at Forex Analytics there with Dale in the morning. Oh, I don't know. I'll have to check. That's like 8 or 9 a.m. Eastern time, somewhere right around there. 8 or 9 a.m. Central Standard Time. Somewhere right around there. I'll have to check. But you guys check and make sure if you want to check that out. Other than that, just be nice, guys. Just be nice. You get the choice every day how you act, right? How you treat people. I see no reason not to treat them kindly. It doesn't matter how people treat you. How do you treat them? Somebody treats you like a jerk, like they're, an idiot. That's on them. How you react to that, how you treat them says everything about you. Okay, don't ever forget that. In a world where everybody's online acting like they ain't got no common sense and they can treat everybody like trash, be different. I promise it'll make your life a whole lot better. All right? Have a great week, everybody. Discord, I'll see you guys over there in just a bit. Take care.